Hey traders, how you all doing? Today we're gonna see this very simple engulfing candle swings trading strategy, and this strategy comes right from my book. I'm sure most of you have read my book already. If you haven't, just go ahead to Amazon. You can find the link below in the description of this video. And this book is an Amazon bestseller. It has a very simple strategy that you can follow. I will show you an example right now. It has a psychological framing to help you in your trading, and it's also fun to read. It's a quick read, and I think from the comments that a lot of people enjoy it. So let's go straight to our strategy. Okay, so let's go straight to our strategy. If you remember from the book, we are looking for bullish engulfing candles in support or resistance areas. We are now at the Australian dollar US dollar pair, and these are weekly candles. We can do it with weekly, monthly, even daily, or 4-hourly. It's the lowest I would go, but I normally, especially for you traders who don't have time to trade during the week or to be glued to the charts every day, you can just come on Sunday and take a quick look at the market, see a few pairs, what is happening, and then what I remember is that you draw support and resistance lines. For example, here we have this important line that I see that it's happening right here. I would say it's happening here, and this was happening on March 21, 2022. And so that's our resistance line, and then our support. I would say we can draw it either here, or maybe we can draw it all the way down here, or maybe here. It's far away right now, so there's a lot of possibilities. Just for now, for this sample, let's put it here. And as you see, right now we are more concerned about our resistance level, and our resistance is important because you can see it has been important already a lot of times. It was important here, then it was important again here. You see all these moments where price touched this line, and then price here rejected. We had it as resistance, then it became support, then it became support again, and then here we have another important moment where it broke support, then it went back, became support again, and then broke it again. But we can see that this area was important, and then it was important one more time here. So we are pretty sure, that this line was important. So for us, this time is for sure is going to be important again, or at least there's a high probability. So this is the end of the week. This is like we are looking on Sunday what is happening. And so let's see our next candle. So this is our next candle. So 1 week later we come and we are realizing that actually this resistance line, it's important because it's acting as resistance once again, but we don't have a trade set up yet. So let's see what happens. Okay, so this is the action during the week. And then the next week we come back and we see that this candle closed. It's important, yes. And then the next week we still don't have any trade happening yet. We have this massive action during the week. Maybe we are monitoring it, maybe not. By the end of the week, we have this bearish engulfing candle. So the whole structure of this candle is engulfing the previous candle. So we can call this a bearish engulfing candle. So by the end of the week, on Sunday, what we do is simply put a short order to short the market, because this is a bearish engulfing candle, and this in case we break this the low of that week, which you can see in this case was, okay, I will remove this for simplicity's sake, and let's say the low of that week was here. That's 0.74260, and so if the price moves lower than this number, we will enter our trade. So we will decide what we want our settings to be. So if you want, you can go all the way here, but that's a lot. What I would do is just use this higher high here, this high as a reference, and put our stop somewhere around here. So that will be my stop. So we don't have this entire swing that it's huge, is massive. And I believe that already if price moves again into this area, most likely we are already out of the trade. So there's no need to put our stop so far away, at least in my opinion. But that's my experience. And then you can either try to trade it all the way here, and that would be a risk to reward ratio of 228. I would say, yeah, I think that looks fine. And so after that, let's see what happens. And then we enter our trade. It's a stop order, which means that the trade will only trigger if price breaks against 0.74260. So if price goes up, we won't enter the trade. So this is an automatic order. You can be during the week in your everyday life, and suddenly the trade enters because you program it. You don't have to be glued to the screen to enter this kind of trades. So okay, so quickly our trade setup was triggered, and then we are now in the green. And well, in the middle of the week, then suddenly price retraces, but we are very far away from our stop loss. That is all the way here. And yeah, the week finishes there. We come back on Sunday and we'll see, all right, well, we are a little bit on the loss, but far away from our stop loss. So the next week, we are really in the green, and price is going in our direction. Okay, so price comes back against us, then it's again in our direction, and then suddenly we are really in the green. When you have like when you are like more than 50% of your profit target, I would normally move our stop loss to 0 to break even. So in that way you have a free trade, and now you don't care what happens. You will be making, if you're not making money, at least you won't be risking any money. So, okay, so price is now in our direction. And by the end of the week, our take profit was triggered. So this was a very profitable trade. Let's say that we were trading with 0.1 lots. We would have made $319 profit, which is of course really good because it really didn't take us a lot of time. It was a very quick setup. And I think everybody can trade like this. It's very simple, and it's a way for you not to be so you don't have so much pressure psychologically. Just enter your trade, everything happens automatic, and this is a very interesting way to start trading. I was actually showing you this example because let's see what happened. We had we have more chance for profits there. But we are already out of the trade, and that's fine because we already made more than 2-to-1 risk-reward ratio, and that's okay. Let's see what happens now because I'm interested to show you that. You can see that this was support and now is working as a resistance. Here, I mean, I wouldn't consider this a bearish engulfing candle, but you could trade that too if you wanted, because the resistance line is being validated. So, okay, let's see. We are very close to today's date. And I wanted to show you this because we have a setup that is happening right now. So you don't care so much about Australian dollar, US dollar during this time, but then suddenly you are today. So as you see, our support line is still valid. The support line that we had before is still valid, but now it's a resistance. Let's just erase these lines because we don't need them. Well, this is our high from the week, and this will be our support. And we can draw it all the way down here. Let's see if we have any confirmation that this is an important area. Don't care about the volume. I always forget to remove it. You don't need it in Forex, but okay, don't pay attention to the volume. So yeah, we can see here it was important. So it was already important here. And it was already important here. And let's see, maybe before, I'm not sure. Nah, it's fine. We can see that it has been already important at least 2 times, so we can take that out as our support. And we have now our bearish engulfing candle. It just happened. Like today is Monday, but if like yesterday you would have seen this bearish engulfing candle here. This candle that is happening here, this trading setup, and this is our classic trading setup. So what we would do is, if price breaks the low of the week, which is here, we can enter a short trade, and the short trade would be triggered here. And I would say our stop loss can go here, and let's move our take profit all the way here. This is 2.7 risk to reward ratio. And I would, if you see the support here, I would not go all the way there, but a few pips above or below, because sometimes price just gets like nearly there, but not exactly. So right now our trade is triggered. We would be in the green right now, but let's see how the week goes, and tell me if any of my readers decided to enter this trade. We have a lot of these bearish engulfing candles happening this week. For example, in the euro dollar we have it, in the Great Britain pound. Well, you could consider it as a bearish engulfing candle, because this is like if you would have like a 2-week. This is a 1-week chart, but if you would have a 2-week chart, this would be a 2-week engulfing candle. Well, if it doesn't matter if you don't take this setup. There are many setups this week. Here we have a bullish engulfing candle. Well, this is the one that we just entered. This is another. I don't like this one because the body is not so large. The wicks are too big, but this is technically a bullish engulfing. This is not a bullish engulfing, but yeah, as you can see, we had different setups happening this week. This could be another bearish engulfing candle. Just what I would tell you is just try to go do your analysis. Take your time on Sunday to see how the markets are reacting in the different pairs, and just try to find your setups, and just always commit with a demo account first, so you understand how this thing works, how your platform works. If you want to trade this strategy, just remember always to use a demo account. Please ask any questions you have down below, and see you in the next video.